What's going on, guys? There was some huge news around Alibaba stock and we are going to go over it today. I'm sorry about this, but I am pre-recording this video. I'm going through a move right now, moving locations for work, and I'm pre-recording just to make sure I'm hitting my uploads. I upload every Sunday and every Wednesday, so this one is going to go up here on Sunday, and we're going to talk here about Alibaba and the news that was just released, and we're going to go over a quick video that was on Yahoo Finance that kind of gets into some topics here. It's really brief, but I think there's a lot of good talking points to go along with it. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So as I mentioned, I'm recording this video on Thursday, so we saw Alibaba go from around $75 on Tuesday to bouncing up kind of in the pre-market and then throughout the day on Wednesday. And overall, it was a huge move in the stock. It came on the back of basically some news out of China that they're going to cut down on their regulations of Chinese stocks. They're going to work on stabilizing the market, things like that. And then driving kind of this downward move in Alibaba and a lot of Chinese stocks is China announced another lockdown of kind of certain areas of the country as they had more outbreaks of COVID. So there's kind of been two sides of the coin here where we have good positive news, which I think is good long-term positive news, of Alibaba announcing that they're going to basically stop regulating and stop cracking down so hard on these stocks. But there's also, that bad news that they're still having issues with COVID and still, fighting things there. So overall, you can see the market just opened today, and we have a little downward move here, kind of into the open. But we're not going to get too much into that. Again, we're focusing on long-term moves and where we think the stock is going to go in the long term. So let's go ahead and jump into that video from Yahoo Finance. So here we have a quick video from Yahoo Finance. So JD.com, Alibaba stocks, they gain after China pledges to support markets. So let's go ahead and jump into this real quick.
All right, China stocks have been sent into a frenzy this morning. The country's top financial policy body pledged to ensure stability in capital markets, support overseas stock listings, resolve risks around property developers, and finish a crackdown on tech companies, quote, as soon as possible. And Jared, these stocks have been on fire all morning. Baba, you name it, some of the top trending tickers on our platform.
Yeah, but I got to call this a dead cat bounce. There's some good news here. China maybe not being as antagonistic towards a lot of these big tech companies and a lot of the growth.
So real quick, just to get right off the bat, so he's talking about a dead cat bounce, and a dead cat bounce, obviously what they're talking about is, the stock bounces up and then it basically immediately drops, back down to low levels, and even maybe breaks through low levels. So with that, I don't think what he's talking about there is unreasonable. I could easily see Alibaba and some of these other stocks, Chinese stocks, going back down to the previous levels. They could go back down into 75, even maybe a little bit lower. But for me, right, this is long-term good news. So what they're announcing is they're talking about less crackdown, less regulations, more cooperation with the U.S. and their regulatory agencies. So overall, really, it doesn't really matter what's happening in the short term, because there's a lot of things going on in the short term that are beating down this stock. Like I mentioned, you have the pandemic reoccurring in China, you have everything going on in Ukraine and Russia, you have interest rate increases. All that is weighing on the stock as well. But the overarching news that caused the stock to be driven down over the last kind of year and a half is the regulatory issues between China and the US. And basically what they're talking about is lifting those issues. So if you think about that, the majority of this downward move has come from that. And that is huge that they're basically turning that around. So what's really will be interesting is how will the stock react, and will the market remember them talking about this once we get past these other issues, past the pandemic, past Ukraine and Russia and interest rate increases. So that's what I'm really looking for. Again, there could be a dead cat bounce, but I think it's a very short-term, short-sighted thing to consider.
Companies as they have in the past, but check out the Wi-Fi Interactive, because this is a really interesting story. I'm looking at some of these names like KE Holdings up 45%, that's in the upper left, DD up over 40%, Pinduoduo 35%, but take a look at these charts. So here's KE Holdings, that's down 85% over the last year. DD up 42% today, well, down 87% over the last year. That doesn't include today's potential gains on the open, but my point is that this is a drop in the bucket for what they have to reclaim. And
And when you look at that and you see all these stocks that are down huge, right, and they're all Chinese stocks. Again, that's all on the back of the news that basically China is, restricting and potential delisting of these Chinese stocks. And now they're announcing basically the reverse. So again, I think this is very positive news. The question is, how will the market react to it in the long term, and will they remember this news once we get past these other issues?
The poster child for all of this, my favorite ETF that tracks China and those tech stocks, is the Crane Shares ETF, and that is KWEB. That is down 73% over the last year. This year alone, down 39%. You can see most of that came over the last month. So let's take a look at a candlestick chart here. And we're going to go back a year, in fact. And you can see from the peak over here, we have lost so much of this. And when we see investors flocking into this, they're not just buying the dip.
And if you look at this chart, it's actually, again, very interesting. So, right, you have the high back here in April of last year, and things are, trending down and keep trending down. And this is what we saw with all Chinese stocks. So this whole move down into here, and then you really hit this stability, this is really where you're leveling off and where you're seeing, right, that Chinese delisting fear. With that being priced in, people are saying that the stock is worth what it looks to be, around $50. And then as we got into the back half of the month, we saw this choppiness. And then in here, right, we saw December and, January, a lot of these inflation rate increases, interest rate increases, everything kind of come up. So that's this move down here. And then, right, everything leveled off, everything got priced in for rate increases. And now, right, more recently, we've seen the Ukraine-Russia situation, and then also Chinese, pandemic coming back up. So this last move down into here, the question is, where are we going to hit support? So it could be a quick bounce back up, and we could, return to this level. But, once we start getting past these things, Russia, Ukraine, easily see the price move back up into here, into the 40s. Okay, once we see interest rates and see how that's gonna affect the market, we could again easily see the stock move back into here, the $50 range. And then right once we see the Chinese delisting thing, everything kind of blow over there, we could easily again see the stock move back into these 80s, maybe closer to $70 range. I personally don't own this ETF, but this is just a really obvious example because it's an ETF. It's showing overall how the market is reacting to these different events, and it's very clear. Again, you can kind of just see it from the chart.
There's actual short covering here, but the problem is, let's say the price gets up to the 40 level. A lot of people who are getting in at this price level right in here, in this range, as soon as they get to break even, they might decide to sell. That's a very powerful and bad investor trait to have, but nevertheless, that guides a lot of price action. And so these moves can feed on themselves. We could go back up to 50, 60, but I have to think that it's going to be a tough slog to get back to those record highs. Look at the peak here.
So he's not wrong, and there are a lot of investors, right? They'll jump into a stock, they'll get really afraid because the stock will go lower, and then once they tell themselves, once it goes back to my price target or where I bought in my cost basis, I'll just sell out of it because I'm too scared of this stock. It's like he also mentioned there, it's a very bad thing to do because all you're doing is, right, the stock goes down, I get afraid, it goes back up into my price, I sell out, and then normally the stock just, keeps running up. So it's not really a great trait to have, but it's definitely something that does affect pricing in the market.
That's not even a bulging bicep. I'm not sure.
That is deflationary bicep, Jared.
I love it. I love it. We got a new technical formation here.
Before we head to break, I do want to highlight Alibaba. Just as you were speaking, Jared, Alibaba moved to the top trending ticker on the Yahoo Finance platform. This stock has just been absolutely thrashed, and deservedly so. Over the past year, Baba shares down about 67%. Here in the pre-market, up 20%. So some of those losses will be regained back, but still a brutally ugly chart for Alibaba.
Yep. So that basically covers it. Like I said, I agree with some of their points, but I think we're starting to see that turn in the market. This is a very little thing. We need to fix these other macro larger issues that are causing bigger problems in the market. Like I said, interest rates, Russia Ukraine conflict, and then Chinese marketplace basically shutting down. But them just announcing this and talking about this, obviously they need to back up their words with actions and make sure they're taking care of these companies in China. But overall, this is a step in the right direction. And once we see these other kind of shorter term issues solve themselves, I think investors will remember this announcement and the stock will easily bounce back up. So overall, I'm very bullish Alibaba. Full disclosure, I'm long Alibaba, so I do own shares of the stock, and I keep buying. When the stock's low, buy, and then when the stock's high, sell out. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Otherwise, have a wonderful rest of your day.